Hello everyone, welcome to the May 14th Thursday market opening bell, your 10-minute guide to the stock market. Market attention is focused on US President Trump's upcoming 3-day visit to China. Hong Kong stocks traded mixed. The Hang Seng Index opened 22 points higher, or 0.08% at 26,369 points. Later turned negative briefly, then recovered to close at 26,388 points, up 40 points or 0.15%. Total turnover was 277.7 billion Hong Kong dollars. The Hang Seng Tech Index closed at 5,093 points, up 23 points or 0.5%. The H-Shares Index closed at 8,876 points, down 5 points or 0.07%. Southbound funds recorded a net outflow of $6.771 billion from Hong Kong stocks, among them net buying of Pop Mart, 472 million, net selling of Alibaba at $1.426 billion, Xiaomi $587 million, XunCe optical fiber and cable $580 million, Tencent $452 million, Meituan $410 million, Fit Hon Teng $361 million, Sino $224 million, Hong Semiconductor $223 million, and SMIC $186 million. According to statistics, Southbound funds have net sold Hong Semiconductor for 6 consecutive days, totaling $1.776 billion. Net sold XunCe optical fiber and cable for 6 consecutive days, totaling $1.415 billion. Net sold Tencent for 3 consecutive days, totaling $1.854 billion, and net bought Pop Mart for 4 consecutive days, totaling $808 million. Technically, the Hang Seng Index held above 26,200 points. After Alibaba's results, its US ADR shares fell then rose, which is expected to help the Hang Seng Index challenge 26,700 points. The 3 major A-share indexes opened 0.5% to 0.9% lower, turned positive near midday and saw gains widen in the afternoon. The Shanghai Composite closed up 28 points or 0.7% at 4,242 points. The Shenzhen Component Index rose 264 points or 1.7% to 16,089 points. The Chinex Index surged 103 points or 2.6% to 4,038 points, breaking the 2015 bull market high to reach a record high. Total turnover in Shanghai and Shenzhen markets reached 32.4 trillion yuan. The renminbi central parity rate against the US dollar weakened 5 pips to 6.8431 per dollar. Hong Kong listed AI large model stocks performed strongly. MINIMAX closed at $818, up 18.5% with a market cap of $256.5 billion. Zhipu rose 36.9% to close at $1,150 with a market cap of $254.5 billion. China's ambassador to the US, Xie Feng, stated that China has become the world's largest owner of AI patents and an important engine for global intelligent transformation. He highlighted MINIMAX full modality large model, achieving comprehensive coverage, listing it alongside Citan's 2.0 video generation model and DeepSeek V4 as representative cases of China's AI industry progress. XunCe surged strongly in the afternoon, rising as much as 26.4% at one point and gaining over 4.7 times year-to-date. On the news front, amid a general decline in general-purpose token prices, combined with policy support from 2 ministries launching the 2026 mod number resonance initiative, XunCe's AI scenario token calling price reached 10 to 100 US dollars per million tokens, more than 10 times higher than Anthropic, giving it strong pricing power that continues to rise. In April 2026, XunCe's token calling ARR surged 300% quarter-on-quarter. Currently, token payment model revenue accounts for about 5% of total revenue, with a target to increase to 20 to 30% by the end of 2026. Token calling revenue is becoming a new growth engine for XunCe. AAC Technologies rose more than 12%, hitting a new high since October 2025. On the news front, its subsidiary XunCe Technology recently achieved mass production of the Ataf series 2.2 MW, 2.6 MW centralized liquid cooling CDU and began global batch deliveries with monthly delivery capacity reaching 400 units. The product is specifically designed for next-generation AI computing centers and high-performance computing HPC clusters. The core parameters of 2.2 MW and 2.6 MW represent the highest power specifications among currently available commercial liquid cooling CDUs, effectively addressing extreme heat dissipation needs from large model training. Core components are fully self-developed, achieving leading levels in flow temperature, control precision, dynamic load response, and environmental adaptability. This marks AAC Technologies' successful entry into the AI computing power infrastructure sector. XunCe Technology Solutions have already secured bulk orders from global top-tier AI data center operators and are used in key projects such as the Shanghai Unicom Lingang Computing Center and Guangzhou Turing AI New Computing Center. The company has also established cooperation with leading clients including Moore, Frets, and Inspur Information. XunCe Technology's monthly capacity of up to 400 units ranks among China's top 3, and it has built dedicated intelligent production lines for 2 MW plus large megawatt units, providing strong rapid delivery and self-development capabilities. JD.com related stocks that released results the previous day all recorded significant gains. JD.com closed at $128.2, up 8.3%, the best performing blue chip stock of the day. JD Health closed at $48.86, up 7.53%. JD Logistics closed at $16.05, up 7.14%, and JD Industrial rose 12.9%. Tencent announced its Q1 2026 results, showing the characteristics of profit beating expectations, revenue slightly missing expectations, strong AI advertising and game revenue deferred due to the Lunar New Year factor. Revenue grew 9% year-on-year to 196.5 billion yuan and rose 1% quarter-on-quarter. Marketing services performed the strongest with revenue of 38.17 billion yuan, up 20% year-on-year and outperforming the industry average. This was mainly driven by upgrades to AI-powered advertising recommendation models, which significantly improve advertisers' conversion rates and cost per click. Closed-loop marketing within the WeChat ecosystem continue to contribute incremental ad loads. Value-added services revenue reached 96.11 billion yuan, up 4% year-on-year. Domestic game revenue was 45.4 billion yuan, up 6% year-on-year, slightly below market expectations of 47.22 billion yuan, mainly because the 2026 Lunar New Year holiday fell later, deferring a large amount of holiday game revenue to the next quarter. However, actual revenue from flagship titles like Honor of Kings, Peacekeeper Elite, and the new evergreen title Delta Force recorded double-digit year-on-year growth. International game revenue was 18.8 billion yuan, up 13% year-on-year, driven by Clash of Clans, Royal Wars, Wuthering Waves, and others. Social network revenue was 31.9 billion yuan, down 2% year-on-year, also affected by the later holiday, reducing in-game item revenue recognition. Fintech and enterprise services revenue reached 59.89 billion yuan, up 9% year-on-year, benefiting from steady recovery in consumption-driven commercial payments and wealth management businesses. Enterprise services revenue surged 20% year-on-year, mainly as Tencent Cloud turned fully profitable after strategic adjustments, with coupled with surging domestic and international demand for AI-related cloud services. Attributable profit to equity holders grew 21% year-on-year to 58.1 billion yuan, remaining largely stable quarter-on-quarter. Non-IFRS attributable profit grew 11% year-on-year to 67.9 billion yuan, up 5% quarter-on-quarter. The market had previously worried that doubling capital expenditure on the Hunyuan large model and AI assistance to over 36 billion yuan in 2026 would severely erode margins. However, Q1 non-IFRS operating profit reached 67.38 billion yuan, up 17% year-on-year, beating expectations of 65.65 billion yuan. This shows that high-quality revenue streams generated strong operating leverage to absorb the short-term costs of AI investments. During the quarter, regulators conditionally approved Tencent's acquisition of online audio giant Himalaya, and there are reports that Tencent is in talks to invest in AI unicorn DeepSeek, further expanding the AI ecosystem and content moat. Alibaba releases financial year 2026 Q4 and full year results, showing the typical transformation pains of revenue in line with expectations. Net profit significantly boosted by non-operating factors, but adjusted net profit plunging due to strategic subsidies in the blood change period and AI investment. Q4 revenue was 243.3 billion yuan, up 3% year-on-year, slightly below market expectations of 246.5 billion yuan. Excluding the disposed high-sin retail and in-time commercial businesses, comparable revenue grew a solid 11% year-on-year. Cloud Intelligence Group revenue was 41.63 billion yuan. Alibaba International Digital Commerce Group revenue was 35.43 billion yuan, up 5.5% year-on-year. Net profit was 24.476 billion yuan versus 12.382 billion yuan a year earlier, mainly due to high net gains from fair value changes in equity investments and base effects from asset disposals last year. Adjusted net profit was only 86 million yuan versus 29.847 billion yuan a year earlier, as essentially down nearly 100%, primarily due to unprecedented subsidies for core e-commerce, instant retail, and AI large models. The board approved a regular cash dividend for financial year 2026 of $0.13125 per ordinary share, totaling approximately $2.5 billion. Alibaba is currently in an extremely painful but necessary operational blood change period. Management has chosen to deploy all operating cash flow into defensive e-commerce, flat sales and low price subsidies, and offensive AI, Quen large model plus cloud infrastructure. Short-term reported profits look very weak, but the 11% comparable revenue growth shows that the buying growth strategy is already delivering results. On the top line, senior management emphasized at the earnings call that the return on AI investment will become extremely clear over the next 3 to 5 years, driving a 7.5% intraday surge in the US ADR share price. Yuyuan Group reported revenue of $1.9854 billion for the 3 months ended March 31st, down 2.2% from $2.0295 billion in the same period last year. Profit was $35.2 million, down 53.6% from $75.8 million a year earlier, clearly missing market expectations. Although the company had issued a profit warning earlier, declining capacity utilization and surging costs in the core manufacturing business still caused a major impact on profitability. US stocks moved individually on Wednesday, led higher by technology shares. The fear gauge VIX index fell 0.12 points or 0.7% to 17.87. The Dow opened 85 points lower, widened losses to a maximum of 309 points, low of 49,451 and closed at 49,693, down 67 points or 0.14%. The S&P 500 and Nasdaq both hit intraday and closing record highs. The S&P 500 reached 7,460 points and closed at 7,444, up 43 points or 0.6%. The Nasdaq rose as much as 1.5% to 26,474 points and closed at 26,402 points, up 314 points or 1.2%. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks, surged 272 points or 3.9% to close at 7,282 points. In the S&P 500, on Semiconductor rose more than 11%, leading gainers. Marvell Technology led the Nasdaq with an 8.2% gain. Nvidia rose 2.3%, was the second largest gainer on the Dow. Nvidia CEO Jensen Huang joined US President Trump's Beijing trip at the last minute. Tesla rose 2.7%, Apple and Amazon each rebounded over 1%, and Google parent Alphabet jumped 3.9% to a new closing high. Ford Motor rose about 13% as the company may sign energy storage solution supply agreements with major commercial clients. Cisco Systems reported fiscal Q3 results ended April 25 with earnings and revenue both beating expectations. It also announced a restructuring layoff plan involving thousands of employees as part of efforts to increase investment in silicon, chips, optics, security, and AI. Adjusted earnings per share rose to $1.06 from $0.96 a year earlier, beating expectations of $1.03. Revenue grew 12% year-on-year to a record $15.84 billion, above expectations of $15.56 billion. Cisco guided Q4 adjusted earnings per share at $1.16 to $1.18 and revenue at $16.7 to $16.9 billion. Market expected $1.08 earnings per share and $15.82 billion revenue. Cisco shares rose 15% in after-hours trading and are up 30% year-to-date. U.S. April Producer Price Index (PPI) rose 1.4% month-on-month, the largest increase since March 2022 versus 0.7% gain in March. The rise was nearly 3 times the market expectation of 0.5%. Service and goods prices rose broadly, indicating intensifying inflationary pressure. Wholesale prices rose 6% year-on-year, higher than the upwardly revised March figure of 4.3%, marking the largest increase since December 2022 and well above the expected 4.8%. Separately, U.S. April retail sales are expected to rise 0.5%, slowing from the previous month's 1.7% gain due to further expected rises in gasoline prices and a forecasted decline in auto sales. OPEC lowered its 2026 global oil demand growth forecast, but raised its projection for next year. It now expects oil consumption to increase by 1.17 million barrels per day this year, down from the 1.38 million barrels per day estimated in April. For 2027, it expects global oil demand to grow by 1.54 million barrels per day, higher than the last month's forecast of 1.34 million barrels per day. Our stock pick today is JD Industrial, stock code 7618. JD Industrial announced its first quarter 2026 results. Revenue for the period reached 5.658 billion yuan, representing a 25.3% year-on-year increase Profit amounted to 185 million yuan, up 45% year-on-year. Non-IFRS net profit was 229 million yuan, growing 54.4%. The group also announced that the board has authorized and approved a share repurchase program, allowing the company to buy back up to $200 million worth of shares in the open market over a 24-month period starting from the approval date. As a leading industrial supply chain technology and service provider, JD Industrials enhances efficiency through digital intelligence, digital and intelligent technologies, and ensures reliable delivery through its physical network. By integrating digital and physical elements, the group promotes coordinated and seamless operations across all links in the industrial supply chain. In terms of industry services, the group focuses on four major sectors: manufacturing, transportation, energy, and comprehensive industries, leveraging its strengths in supply chain infrastructure and digital intelligence technologies to continuously develop scenario-based solutions. In customer collaboration and service enhancement, the group extends its end-to-end digital intelligence infrastructure into clients' internal operations, working closely with them on top-level procurement strategy, planning, and full chain system development to drive the implementation of digital intelligence capabilities across various business scenarios. In its service model, the group remains customer-centric and continues to build a comprehensive end-to-end industrial supply chain service system. Through sustained investment and optimization in key areas such as product governance, procurement cost reduction, fulfillment optimization, and operational efficiency improvement, is gradually becoming a co-builder of partners' digital intelligence transformation and an enabler of supply chain capabilities. In the first quarter of 2026, JD Industrial continued to strengthen its industrial supply chain product capabilities and deepen strategic cooperation with leading suppliers such as Sata Tools, 3M China, and Lind Forklift Truck. By further integrating industry chain resources and expanding product categories to create sales synergies, the group drove accelerated year-on-year revenue growth with key enterprise clients. At the same time, it leverages its advantages to promote standardization of industrial products and simultaneously launch an industrial goods price index. This price index, based on the Joy Industrial Large Language Model, provides enterprises with authentic, credible, and publicly verified price reference benchmarks for industrial procurement, helping companies ensure compliance and improve operational efficiency. Furthermore, to address major pain points in industrial products such as non-standardization parameters, long-tail items, and information asymmetry on both supply and demand sides, the group has continued to strengthen its full chain AI technology capabilities. It has launched nearly 40 AI agents serving over 3,000 key enterprise clients. AI technology is now widely applied in areas such as product recognition, intelligent matching, batch ordering, and precise customer demand forecasting. Through driving Mercator product capability development, AI also helps clients build standardized product libraries and further improves product standardization levels. In addition, AI has significantly enhanced manpower efficiency in core positions such as procurement, sales, and product management. AI technology has been comprehensively applied across multi-business scenarios, achieving operational efficiency, optimization, and commercial value realization. Recommendation: buy-in price $15.5, first target $17, next target $18.6. Cut stop loss at $14.7. I do not hold the above stock.